You've shifted your business over the past couple of years and you're involved more in gap funding, especially in the multifamily space. Can you explain a little bit more what gap funding is and how you're approaching it?
Gap funding to me is really like the perfect side business for somebody like myself. So I'm a corporate lawyer. I've been doing that for over 16 years. I used to work 100 hours a week, have to drop things on a dime and just work on things to get it done. I have a somewhat flexible schedule. I don't have the most flexible schedule. I do have one, particular massive disability, which is I have 5 children. So all kinds of random crap will happen where I have to drive them somewhere or pick them up or just with 5 kids, you just have 5 different distinct elements
Yeah.
of risk that are sometimes correlated and sometimes
I'm
uncorrelated.
busy with two.
Yeah, you're
I
already
don't know how
swamped
you do
with
it.
2. Yeah, so but I still have a pretty flexible schedule relative to other people that I know. So I'll just give you a perfect scenario. So there was a deal in Dallas. The lead sponsor called me at 9 a.m. He was referred to me by a guy that was referred to me. So that was a third tier referral. He called me in the morning and said, "Hey, I had an investor back out. I need $6 million today to close." And I said, "You mean like today, not tomorrow today?" He said, "No, dude, what do you not understand about today?" And I said, "Well, I don't even know if I have $6 million. I gotta go check and blah, blah, blah. I gotta go make some calls." And he said, "Okay, cool." So he made a bunch of calls. I made a bunch of calls. I had to go to a business lunch along the way. I couldn't cancel it. And then we reconnected around, 1 p.m. that day, after my lunch. And he was like, "Hey, dude, like, so what's the story?" And he told me about all the calls he made. So a lot of people had like 1 million, 2 million, but they weren't sure if they could do it that fast. Their lawyer needed blah, blah, blah. Long story short, I funded 6 million at 3 p.m. that day. I was able to do the legal work. I, through a couple of partners and the private equity fund that I run, we cobbled together the money just in time, closed the deal, and we got paid back 3 days ago. So we got paid back around 88 days. So in that situation, the repayment strategy for him was he basically used our $6 million to fill the gap that he had in his equity raise.
Mhm.
And then he continued to raise money after post closing to then pay off our loan.
Because the risk, had he not been able to do that, is losing the deal or maybe losing his earnest money, worst case, or something very painful is going to happen on his end, which is probably going to impact his investors too.
Absolutely. So from his perspective, he was going to lose hundreds of thousands of dollars of earnest. I actually know the earnest money on that. It was like 850K of earnest money that was at risk. Plus, he would have to return all the millions of dollars he'd already raised from investors. Plus, he wasn't going to make his acquisition fee on this deal. Plus, he looked, stupid to the broker. Plus, he had great first lien lender. He had a great preferred equity source. He just looked like a fool to everybody.
Yeah.
So for him, he was potentially looking at a big financial and reputation loss if he didn't close. So it was worth it for him to borrow the money from me, and in particular me, because it was too hard to cobble together a large amount of money from multiple people with multiple lawyers doing their own thing, trying to coordinate. That's just
Yeah, it takes
asking
too
for
long.
trouble. One person that's basically his own lawyer is going to be by far the better counterparty. And it's worth paying a premium for, because then you don't have to coordinate like 17 different people at the same time, which is, I kind of think statistically it's impossible. I don't even know the point of trying to do that.
Yeah, and really, I don't know what the timeline of that deal is, 3, 5, 7 years or whatever. When you boil it down, the cost and interest and whatever other dynamics or financial dynamics were, it's probably relatively small. Not in a perfect scenario, he would have just been able to raise all the money, but given the choice of lose the deal, lose a lot of money, open up maybe litigation from the seller for not performing, versus pay a little bit more in interest and whatnot. It's really not. I mean, it makes sense that you would go that route if needed.
Yeah, you have to be very, very logical and stoic about it, because it's not going to feel good. But if you think, short term pain for long term gain, it's 1 billion% that.
Yeah, I mean, I've always opened it up to like hard money. So a hard money lender, if you've never looked at hard money rates, I'm not sure what they're going now. Probably anywhere from 12 to 16%, depending on the deal. Probably anywhere from 2 to 5 points, maybe more, depending on the deal. And then even some hard money companies want you to have an additional 10, 15% of skin in the game. So looking at that, like, oh my God, that's so expensive. But I'm like, if you're flipping the house, when you average all that out, it's really not that much. I mean, if you're going to make 50 grand on the flip and you average out all those little fees, it's by percentage, it's not that much. If you're going to hold it as a rental, then it's even less when you average that out over a 7-year period. So ultimately, you got to do what you got to do to get the deal. And if the fundamentals still work, just pay it.
Thank you. I'll give you $5 for that commercial, Chris.
I mean, I gave you plenty of money.
Yeah.
And then I didn't. I actually, there were a couple of deals that I paid cash for, and all of them I regretted. One, I paid cash for a deal that turned out to be a fraud, and I had to wait a long time for my title policy to pay me back. So I really regretted that. And then other deals where I've just self-funded more rehab than I needed to, and it just took a while. I don't know. I'd rather have cash in the bank and just pay a little bit extra in interest. Liquidity is what really kills you. So if you can pay a little bit more for liquidity, I think that's a good strategy. So gap funds, is there any other scenarios where someone might need a gap fund or may consider working with a gap fund lender?
Yeah, absolutely. So the most common is a shortfall in fundraising, which happens because somebody backs out, or another common scenario is just lack of time. So a couple of teams have told me their attorney was too slow in preparing the PPM, so then they wasted 2 weeks not being able to send it to investors. In that case, anybody that has that problem, please call me. I don't do that type of securities legal work. I can, but I choose not to. But I refer it all to someone that I really enjoy working with. He set up all the funds that I have, and I've referred him dozens of clients, and he's always done a good job. There's really no excuse for an attorney being the one that holds up your deal for multiple weeks. And I've been, unfortunately, on the receiving end of some of that. A lot of deals that I'm personally on, sometimes there's like famous lawyers who are really good at business developing within multifamily, but they're actually horrendous at actually doing the work correctly or on time. So I'm always kind of, they're more sizzle than steak. So I got a guy that's all steak. Anyway, that's common. Another common one, especially with 1031 investors, they seem to be very finicky. And I think what they do is they select 25 different opportunities, and then they might tell like 12 of them that they might do it. And then right at the end, they might say, oh, I can only fund one of these. Oh, shit. Like I got to go tell 11 other people I'm not doing theirs.
Oh,
there's stuff like that going on. And then, another one is somebody needs money for a different project, but they have equity in an existing project that I could put a second lien on or secure a different way.
you're
And
backfilling a redemption.
Yep. And then they'll sell an asset to pay me off. So long story short, I'm giving a lot of examples, but all I really care about is there a short-term acute need for money? And short-term I define as under 6 months, and ideally under 4 months.
So someone coming saying, hey, I've got this killer deal. I need 3 million. We're going to give you a preferred equity position. It's a 5-year play. You're not interested in that.
I'm going to say call Chris Bounds.
There you go. But they're like, hey, look, got this opportunity. And I think I can get you paid back in 3 to 6 months. That's interesting to you.
Yep. I'm going to drop everything I'm doing. I'm going to look at that.
Okay.